Hello, I'm Tim Rozar, Chief of Staff at RGA. I'm pleased to introduce this next session, which will focus on the life and health protection gap and how things have changed as a result of the pandemic. We have a diverse panel of executives representing a range of global and regional companies from the US, India, and Singapore. So to get started, let me turn the discussion over to today's moderator, Ken Mungren, who is the chairman of Milliman.
Welcome, everyone. It's a delight to be here today. I'm Ken Mungren, chairman of Milliman, and today we're going to be talking about bridging the protection gap in a post-pandemic landscape as part of the Global Insurance Forum. As you all know, the insurance industry really finds itself at a historic moment to close the life and health protection gap. We've had a terrible pandemic, but a byproduct of that has been that the marketplace itself has been shaken up in all kinds of exciting ways where we could have innovations. We've seen over the past 2 years now that everybody understands the compelling value of insurance. Healthcare systems have had to adapt and re-engineer their processes, and that's led to people embracing technology at an accelerated way, and now a willingness to use that to protect their families, to protect themselves, their families, and their communities. So insurance companies are now able to ride this wave and create all kinds of exciting innovations to close the protection gap. So I'm delighted to be here today with some industry leaders who are going to share their thoughts on this topic. We have on our panel Chris Way, who's the Executive Vice President, Chief Client and Innovation Officer at Sun Life, Robin Raju, the Chief Financial Officer at Equitable Holdings, and Vishaka, who's an MD and the CEO of India First Life Insurance Company Limited. All right, let's get started. We're going to start our conversation by discussing opportunities that our panelists see in the marketplace to close the life and health protection gap. So we'll start with Chris. Chris, what are some of the opportunities presented to life and health insurance companies today by the protection gap? How can companies help to close this gap?
Thanks, Ken. It's great to be here. Let me start by saying sometimes when I speak to my industry colleagues, there seems to be a bit of fatigue in addressing the topic of protection gap, right? It's raised as a key topic and then people go, oh my God, here we go again. Let's look at the need though. If you think about even the most leading economies in the world, and we'll start with the US, according to the American Journal of Public Health, catastrophic medical costs is still the #1 cause of household bankruptcies in the US. And even when you have employee benefits, sometimes that fundamental deductible is very high and it is unexpected, and that is catastrophic in certain households. Then if you look at WHO reports, and one of the leading causes of households falling below the poverty line in Asia is due to medical costs. Even in Canada, where there's universal healthcare, and I work for a Canadian company, the Canadians are very proud of their national healthcare system, but there are certain elements that it doesn't extend into, like mental health, which is an increasing cost load on people. And we all see through the pandemic sort of the crippling effects of disability due to mental health. If you look at hospital statistics, particularly attacked is youth. And it's really sad to see sort of the number of emergency visits due to mental health, eating disorders, serious eating disorders double, suicide attempts double. And there are various reasons for that. But mental health is not covered as universally under the Canadian healthcare system. And if you think about all of us probably have aging parents, if you have aging parents at home that need nursing care, long-term care, again, that's not covered by the national healthcare system. So all to say, the system is complex. Our products are equally complex. Our distribution models might need to be evolved. But fundamental to all this, I believe, is really the industry does continue to need to build trust. We sell a promise, and we sell a product that is not always easy to talk about. I think we need to start with very early education. We need to integrate this into every conversation that we can find, whether it's through even in the earlier time of a person saving the financial planning journey, is to sort of integrate that conversation in. And we need to fundamentally deliver value. And what I mean by that is sometimes the industry needs to, as we simplify, as we think about levers to kind of drive economic efficiency, we need to pass that on to the consumer so they feel that they're getting great value for the products they buy. So I'll stop there, but I would sort of conclude by saying there is a massive need and the industry should rally together to deliver.
Fantastic. That was an excellent overview. Thank you very much, Chris. Let's go on to Vishaka. Vishaka, insurance penetration has historically always been calculated as a percent of GDP. Is this the right way of thinking about it, or is it time to introduce some additional parameter of insurance density as we try to address the protection gap?
Yeah, thanks, Ken. I think I echo Chris completely when he says that there's a lot of fatigue when people start talking about insurance penetration and fulfilling the gap. And especially if you look at it from a country like India, where we had 2 government schemes that got rolled out, which were self-funded. And if you just look at some quick statistics, right? If you look at the overall population, we are about a 1.4 billion population. And we have almost, let's say, 30% of the population, which is greater than 18 years, is insured under the government schemes. So we have issued about 408 million policies under the government scheme over the period, over a general insurance and a life insurance, which is a personal accident and a term life. When that is about 30% of population that has been insured under these schemes. And then you have the Swiss report on penetration, which talks about India being at 4.2% of penetration. But these 2 numbers just don't add up, right? I mean, on one hand, you have 30% penetration of insurable population. Other hand, you have a 4.2% penetration, because the way you're calculating 4.2% is on a GDP basis. So where are the number of lives? Where are the people coming into a factor? And so this whole correlation that is being done today in the way insurance is being mentioned, which is on a GDP and a total insurance premium, it does not take into account at all the number of people who have actually been insured. And insurance penetration is about the number of people who cover it. And if we don't answer the questions right, and if we don't ask the right questions, then it's very hard to take any initiatives. So I believe that we need to look at insurance penetration from a number of policies sold over the population of the country, and then probably look at the quantum of insurance that's been sold in that policies, and probably do a little more of deep dive into data and not use the proxy of a GDP over gross domestic product over the total insurance premium. Maybe that was being done at a point of time when we didn't have so much of data. Today, we're living in a world which is, I think, a data overload. I mean, we want to push away some of the data and say, stop, we don't want any more data. So in this kind of an environment, we really must change the way we're looking at it. We must look at people who are covered and what is the amount that they're covered for, and start understanding whether it is an insurance gap in terms of not being attached at all, or it's about the quantum of insurance not being sufficient. Because only then will we be in a position to take corrective action to ensure that insurance, which is a necessity, which I don't think needs any reiteration at all, is really adequately penetrated.
Vishaka, that's amazingly insightful. I mean, you highlight that insurance is about protecting people, not protecting an economic statistic. And very often you just kind of sort of take it for granted that, oh, well, we've always analyzed it this way, or we've always quantified it this way. And you kind of get to the point of like, well, why are we doing it? To protect people. And Chris, you talked about protecting people's health. And now, Robin, maybe you could come into the conversation and talk about another social problem where everyone needs protection, which is everybody has this basic problem. How do I provide for myself and my loved ones as I get older? And so when we think about that we look in the US, the number of US retirees is increasing. yet the number of households with traditional retirement savings plans continues to go down. Can you talk about this trend and ways that the financial services industry can address the growing retirement gap?
Ken, and thanks for having me here today. But as you said, the U.S. retirees are expected to increase by 62% by 2055, and which current estimate means that the retirees are projected to be 22% of the U.S. population. But let me put it in context. The U.S. has the biggest retirement market in the world. It's almost 30 trillion right now in the hands of individuals. And it's such a great opportunity for the industry to serve a good by helping individuals manage retirement income. What they need is protection and income. And no one else can serve this role that insurers can play in the US. The US used to be on defined benefit plans that used to guarantee income for people. We no longer have that in the typical retirement plan in the US. And insurers can play this role, and regulation has moved insurers to play this role. Specifically within 401k plans in the US, it's 7 trillion. They now allow insurers to provide guaranteed income to retirees in their 401k plans. And we believe this is a game changer for the insurance and asset management industry. And traditionally, how people think about retirement is totally different now than it was 20 years ago. It's not just retire and travel and spend time with your grandkids. People want to do different things. People want to start small businesses. People want to manage and invest. It's totally different purpose. And at Equitable, it's changed our purpose and our mission. Our mission is to help clients secure their financial well-being so that they can pursue long and fulfilling lives. And we're well positioned, and the industry is, through the complementary of offerings and providing guaranteed income to retirees. But it goes back to Chris's point, and I liked how you said it, Chris, earlier. It's about trust. Insurers, through the complexity of the products that we offered in the past, and also not everybody managed risk appropriately, Ken, as you know, especially in the US with guarantees. If you can manage risk appropriately and create trust and build back trust with the end consumer, we can solve this retirement gap and ensure retirees can help live fulfilling lives and reach their dreams. We serve a purpose in society, and that noble purpose is to help people provide protection, but also help them achieve their dreams. And insurers specifically have a unique capability of doing this.
That's fantastic. Shaka talked about protecting people. Robin talked about helping people achieve their dreams. Listen, you've all done just a great job of identifying what is the opportunity in the market, what are the problems people face, and how insurance companies can help them address those problems. Now let's get into the nitty-gritty of actually, building organizations, building insurance companies that can actually deliver these solutions to people, to families and communities, and so on. And what we've seen during the pandemic is a massive acceleration in the use of technology, new ways to organize ourselves to solve complex problems. So let's delve into how insurance companies can ride this wave as well, in terms of how companies can use innovative organizational structures and technology to effectively serve customers to close the protection gap. So Chris, we're going to go back to you and start with this. Robin highlighted the purpose of Equitables as an organization. Sun Life is really widely known as having a very strong sense of purpose as an organization and using that to create an effective organizational structure. So Sun Life's purpose statement is helping our clients achieve lifetime financial security and live healthier lives. How have you and your colleagues gone about building such a purpose-driven organization? And then, given that you've built it, does having a clear sense of shared purpose actually drive improved results across the full range of stakeholders at Sun Life?
Thanks, Ken, for the question. It's actually my favorite question, but let me start by saying I recently joined Sun Life, so I can take zero credit for this. But I think it really makes the point that to build a purpose-driven brand, it takes years. And it takes commitment all the way from the board level down to the executive team and how we communicate and how we live our values. And how they talked about Sun Life's purpose is precisely why I wanted to join. And I have the privilege of having a role that sort of integrates a number of these dimensions and help to deliver on that purpose. But let me kind of drill down a little bit. So I would say if you just look purely at the words, those words are shared by many other insurance companies in our peer group. What's going to make a difference is ultimately how we deliver. And how we're doing that is sort of recognizing it's all about impact. It's not talking about the purpose, it's actually delivering on the purpose. And we're going to measure it across 3 dimensions. Starts with client impact. Client impact extends into social impact and ultimately into global impact. And we're integrating that with our sustainability strategy as well. And if you then wrap back into kind of the 2 main verticals of impact at the client level, which is we're helping our clients at an individual level live healthier lives, but also at the same time allowing them to hopefully build towards lifetime financial security. Wrapped around that is DE&I as well as sustainable investing. So that's kind of the structure. And if I think about how we pull together integration of all that into day-to-day activity, which is really what you're asking, Ken. And I won't give you a product example, but I will give you a DE&I example. Because a lot of organizations, when they think DE&I, they go after a target. I need a certain percentage of my colleagues to be underrepresented minorities, or I want a certain percentage of women in senior executive roles, etc. And those are really important. We have those too. We will measure and deliver against those. But let's think about the holistic nature of DE&I. And if I think about, let's say, a target that we want more underrepresented minorities at the senior executive level, VP plus, the first problem is actually having more of those underrepresented minorities in the organization. So we have a scholarship program. It's actually an honor sort of in recognition of a past CEO of ours, Dean Connor. We have a Dean Connor scholarship that targets specific underrepresented minorities so that they can not just be funded through university, but we give them guaranteed internships at Sun Life after. So really to sort of get that going. But actually, if you think about it, that's too late. So if you work backwards, then we're working with communities to help build, help mentor, build self-esteem in underrepresented minorities of a particular youth group or at-risk communities. And we're very proud to have a very broad-based sponsorship program that allows that. We sponsor the Raptors, working with the MLSE Foundation to specifically work with, for example, Black and Indigenous youth in basketball programs, mental health coaching programs, again, help them build self-esteem, and also for them to actually realize there's a career path in certain industries that otherwise they would not be even aware of. So this is a 20-year social effort. It's not a 1 year or a one target. And that just sort of touches on, but that's also not the extent of DE&I. If you think about financial inclusion, how we offer in Canada, I mean, it might be assumed in Malaysia or Indonesia, but in Canada, offering Sharia compliant funds so that Muslim customers can save towards a good retirement. If you think about how we can influence our procurement and supplier network so that they each have value systems that promote diversity and inclusion and equity. If you think about the $1.4 trillion of assets we manage through our ESG and stewardship programs, we can also influence the companies in which we have a stake in for them to think DE&I as well within how they govern. So our reach is much greater when we harness the power of Sun Life as an organization. So that's why I'm really excited to be here.
Wow, that's fantastic. What an amazing overview of what a strong sense of purpose can accomplish and how it can drive the actions of the organization. Very good. Let's go on to Vishaka. So the pandemic has made it so clear that we live in a far more connected world than ever before. And it's not just through technology, but also through physical interaction. The spread of the virus that caused the world pandemic really blurred borders in so many different ways. However, insurance companies continue to operate as if it was the before times, if you will. They operate on a standalone basis. What are some of the collective learnings that we can use going forward to bring about impactful change?
Yeah, thank you, Ken. Chris, you just joined Sun Life, and I started my life insurance journey in Sun Life 22 years back through their joint venture in India. And the reason I'm stepping back to 22 years, Ken, is actually to talk about how when we started underwriting life, when we used to do underwriting in life insurance in 2000, the only other person who would give us any data was the reinsurer. There was nobody else who could give us data. There wasn't that much of technology. All your underwriting, the technology was only from a backend storage perspective. You had computers who would do processing and recording and probably emails. That's what we had kind of moved into. But you did not have any of the fancy technology you have now in terms of an API integration, in terms of sharing of data, in terms of common analytics and all of these. So every insurance company used to watch out for themselves. Their underwriting used to be based on their experience or at best the reinsurance experience of the country. Then we moved on and we had a lot more data sharing. And when I talk of India, we had something called the IIB, which was the Insurance Information Bureau that got set up. All insurance companies started sharing data. So today we are at a world where we can look at common data across the country. So whether it's fraud prediction, whether it is willful, malified intention to defraud by customers, whether it is bad lives, whether it is geographical risks, any of those underwriting parameters that one would look at, which earlier used to be very company specific, can now actually be a common shared data. So while I, as an insurance company, might not have had any adverse experience in a particular zip code, if the data in the IIB demonstrates that that zip code has got lots of frauds, it just alerts all of us to be able to draft our underwriting models accordingly. So we have moved from being very individual standalone insurance companies to probably India specific. Now with COVID, right? And that's been the fascinating part. I remember being at a meeting in February of 2020, and there was this gentleman who'd come over from US for that meeting. And he was like, you guys don't understand, the pandemic is about to strike. And we laughed him out of the room. We said, listen, that must be a first world problem and it is not ours. And within 3 months, we all saw what happened. I mean, the pandemic truly demonstrated that the world is one. Whether all of us want to admit it at a very individual heart-to-heart connection level is very different. But at a political and at an economic level, the world has become one. Look at the impact of the war of Russia with Ukraine, and it's on the entire global economy. Look at any event, it's now impacting the world. We don't take any decisions in India without seeing what the Fed is going to be doing, and so on and so forth. In this interconnected world, in insurance, since we are on an international panel, I want to actually throw that question open and say, what are we doing to use technology, which is helping us to access data across the world, to really understand and price risks in a better manner than the age-old fashioned way of looking at mortality tables in that particular segment and pricing it? Can we make underwriting far more dynamic? Can we use global level data? Aging is not only it's not only restricted to a particular country. It's probably getting across a particular segment of customers. Probably all customers who are at a particular strata in life are all going to age and live up to 90. So would that impact annuity rates across the world? Now, how are we going to be able to use data and truly make this, and use technology and data to truly make this international underwriting and not continue to behave like we are in silos? Because politically and economically, we are not. It's only at an insurance underwriting level and claims level that we believe that we are isolated. So I think that's the point that I wanted to make, to say, how are we using the evolution of technology and data to really start learning from each other and perhaps inventing ourselves better.
That's wonderful. It kind of illustrates that a lot of times the silos and the boundaries that we operate by really just exist in our head. And so you're laying out a much more expansive view of conducting the work of an insurance company by just ignoring those boundaries and saying, look, let's look out at a global data set and really get to a better solution to protect people. So that's wonderful. Now let's go on to the nitty gritty of organizational structure and using technology to conduct effective operations. So Robin, if you could talk about the experience that the pandemic gave us all with remote work. The pandemic gave employees the opportunity to experience remote work, and many don't want to let it go. So how is your company approaching the future of work?
Yeah, Ken, it's a great point. 5 days in the office, I don't see that returning anytime soon. But the pandemic has changed the definition of work-life balance for many of us, myself included, overall, and also how we serve our clients. So it's two-front, employees and clients. So at Equitable, we embrace these changes that the pandemic has brought us as professional lives. And we've also reimagined the future of work for our organization. And this is much more than just about people's physical location. We're using these key principles of inclusion, flexibility, and connectivity to foster an environment that works for both individuals, teams, and culture. The pandemic, though, has also taught us to balance all dimensions of well-being. You've seen some horrific stats across the globe in terms of depression during the pandemic and how that's increased and rattled up. So as an organization, what we do for employees, it's much different. It's not just providing a physical location, it's providing a balance to achieve the optimal health, resilience, and performance. We need to be there in more ways for our employees than we've ever had to. And so that's a calling of all executives across the insurance industry and all industries, frankly, to focus not just on physical work, but also on well-being. So what we've done is we've introduced a flexible work model, but it's anchored on trust and empowers collaboration, and it's focused on well-being. And we've really emphasized a leader-led approach. So no specific mandates top-down, but we've asked our teams to lead. We do believe in in-person collaboration. We know that's great for training, but we want it done with a purpose. And we want to embrace what the benefits we have from the pandemic. Before pre-pandemic, we would have said it's impossible to serve our clients during this time being fully remote 5 days a week, but we know we can. And we know our employees through polling enjoyed the balance of life, being there with their families. For me personally, Ken, I've been able to take my daughters to school during the week sometimes. Sometimes pre-pandemic, I wasn't seeing my kids during the week. So what a great balance for me and joy for me. And being happier and having a greater sense of purpose and well-being makes you more productive, actually, and a high performer for work, whether you're in the office or remote. So that flexibility that we provide to employees is important. Now, it's still early days. If I say, I wouldn't say post-pandemic yet, but it's still early days in terms of flexible working and leader-led approaches. And I'm sure our approach will evolve with the purpose of our employees and our customers. But most importantly, Ken, it's about serving our employees and making sure the well-being is there, but also providing them services that they can utilize to benefit themselves. And in doing so, we'll be there for our consumers and for our clients at all times. In 2021, during the pandemic, Equitable paid out $5 billion of claims to clients. It's about that trust that I go back to, anchor on what Chris started with about trust. If we can serve and create an environment of trust for our employees and trust for our consumers, then insurers can come back and really take advantage of the opportunities in the market by balancing and starting with trust. And so that's our approach here at Equitable.
That's fantastic. I mean, you all talked about building organizations that are founded on trust and purpose, getting rid of artificial boundaries and barriers that have kind of held us back in the past, and then sort of unleashing your people in a more flexible way of working so that they can actually accomplish some amazing things. So that makes me very optimistic for the future. And as we go into that future, now we can move on to our third topic. It's just so obvious to me that we're going to advance as an industry, not by doing things in the same way that we have in the past, just repeating it over and over again, that our future is going to be marked by innovation. And innovation is, it's incredibly exciting, it's messy, it's difficult. And so let's talk about innovation and strategy for all of your firms and the new solutions that you're trying to create to meet the needs of customers. So Chris, we're back to you. And as Chief Client and Innovation Officer is right up your alley. You literally have the word innovation in your title. So what do you see as some of the client needs that are calling out today for innovative solutions where the ways of doing things in the past just aren't measuring up? And then how do you foster the process of innovation at Sun Life? And be wonderful if you could share some stories or examples with us.
Let me start by saying, just because I have the word in my title, it would be an extremely arrogant position for me to think that I would drive innovation. And what I mean by that is whenever I talk about innovation, I start with a Finding Nemo video. So those of you who have kids and seen the movie will know there's a scene where the fish are caught in a net and Nemo goes swim down, and they get out of the net. And that's about sort of a great way of visualizing the harnessing of organizational energy. And when you have politics and disagreement, energy is negated. When you all swim in the same direction, you harness organizational intellectual capacity. And I think that's what it's all about. So my job is really identifying smart people and then just creating an environment for them to test and learn. And if then you break it down into bite-sized thematics, right? And that's one of my favorite words these days. And for example, if we think about the purpose statement that Sun Life has, these are big, chunky statements of pain. So break it down into what we're trying to solve for. So you can't just say live healthier lives and attack everything. Let's pick something. So for many years, diabetes has been one of those big things that Sun Life is trying to solve for. Then you got to break it down and go, well, what are we solving for? You're solving for long-term behavioral change. Then you break it down and go, okay, what does that mean? It's understanding that when 2/3 of your clients fall off treatment plans, and that creates all sorts of chronic care condition complications, that's what you're solving for. Then work backwards and go, okay, what does that mean? Well, it's always kind of four things. It's changing behavior on exercise, on diet, on smoking, and alcohol. What does that mean? Then you have to think, okay, well, I want to create this ecosystem of capability such that we can manage somebody's long-term behavioral change. The painful part is everyone's different. What would work for Ken and Robin doesn't work for Chris. So then you need data, you need AI, you need the right nudges, you need the right technology, and you need to make it frictionless. So the frictionless point is if I'm pricking my finger every morning, right off the bat, I'm going, I don't like pricking my finger. It doesn't feel good. Two is human behavior is, especially men, I'm male, so I can say this. We're very, very good at denial. So we'll prick our finger at the wrong time. So our blood sugar level looks a little bit better. But that doesn't quite work. I mean, over time, yes. If you have a discipline of managing HbA1c, it might work a little bit. But if you want a game change, then you need continuous glucose monitoring. And there's good technology advancements in that, but it's still really expensive. It's still not frictionless. And I'm hoping that there'll be real advances in that in terms of both lowering the cost as well as really making it seamless for the data to flow. Then you've got at least a little bit to work with. And I might say, okay, I need a nudge now because Chris had a massive burger for lunch. So around 6 o'clock, maybe I'll let him know, don't have a big plate of pasta for dinner. But it requires a longer term tracking of spikes. It's educating the client on what that means, but it's not just taking the client on an individualistic journey. This is where it gets hard. It's got to be social in fundamental nature, because you need to involve friends and family to help that particular client on their wellness journey. Then you have to think, well, what nudge is going to work? So for Chris, it's not asking my wife to remind him not to eat that plate of pasta. It will work better for me if my son tells me. But even then, if my son tells me 15 times, even my son's nudging will become nagging. So my point is habituation and well-intentioned, even in its nature, will change over time. And you need AI. It's the only way to create an engine that's going to be broad-based enough to actually adjust the way that those nudges, both carrot and stick, are going to work. And if you think about retail as a good example of that, just think about how Amazon, how Shopee, any of these kind of leading state-of-the-art technologies work. They will try different promotions on you at different points in time, and they're learning what we prefer. And they're never one thing, right? So that's kind of my point, is this is a fundamentally different way of thinking about innovation. But trust me, Chris is not going to come up with this. It's harnessing a whole bunch of people that are all passionate about solving diabetes. It requires open platform thinking, industrial strength APIs, working with an ecosystem of partners that are aligned to that purpose, not only thinking about making the next dollar and doing that IPO. So again, I don't mean to jump on a soapbox, but I hope that gives you a sense.
It absolutely does. And it's such an enormous problem to solve, but the way you laid it out kind of breaks it down into manageable pieces. And it seems like there really is a path forward to accomplish this in the coming years. So that was wonderful. Ashok, let's talk about connections and interlinkages. So when we look at the link between health, critical illness, disability, and life, it's never been felt more acutely than during the pandemic. And so given that scenario, is there product innovation that's required that integrates the benefits of health, disability, critical illness, and life for the interest of the customer? And what prevents us as insurance companies from doing it? What kind of enablers are required?
Thank you so much, Ken. And from the exotic world of AI that Chris has taken us into, I'm just going to come right back into product innovation. I think AI has got miles to go in insurance as far as life insurance is concerned, or health insurance is concerned. I know we've been trying it in India for almost 5 years now, and the kind of pilots that you run. And I find that we haven't been able to solve a fundamental problem of managing health insurance premiums. And it's not yet such a big problem in India. But if we were to look at the US and imagine that we're going to be seeing a world in India which is going to very fast move in that direction, health insurance is becoming virtually unaffordable today. And with so much of technology, which is supposed to simplify life, which is supposed to be able to give that interlinkages between health and life, if I have a good health insurance policy and I wear all the gadgets and put on all the patches that Chris was referring to, will I get life insurance virtually free? Because, my health is so good that I won't have a life insurance premium at all. Or if I get really highly rated up for life insurance, then do you not give me a health insurance? Today, there really is no linkage between the two. The companies which do life do not do health. The companies which do health do not do life. And very rarely have you seen really the entire linkage and treating the individual as a human being in entirety. Health insurance premiums still are annual premiums, which can escalate every year. Life insurance premiums can be guaranteed across the duration of the policy. Why do we have equated for life, and why can't we have the same thing for health, so that people can actually plan their outcome accordingly, but they're not able to do so in health. Health tourism has picked up. India is a huge health tourism destination today because it's got world-class hospitals. And from the cost perspective, even if you include the flight tickets by business class, it's still cheaper getting treated in India than it is to get treatment in the US. Are we even exploring this possibility and trying to see whether the entire problem that we've got of health premiums can be addressed by truly referring to the globe as one? I know this seems to be my fetish for the day, the world is one, but then it's just so obvious when you're on a panel like this. I mean, we're signing in from 4 different countries. We're talking on a panel on which is a common topic to all of us. But in reality, on ground level, policy level, product level, customer level, we have absolutely no sharing of information. We have absolutely nothing that we do in common while minds meet. The problem, I think, that we need to at risk in innovation is not for the top end. The high net worth individuals, I think they all know how to take care of themselves. It's not for the bottom end. The below poverty line have got equivalents of Obamacare, I think, everywhere in the world. It's that middle class in India we refer to. I don't know what it's referred to the world over, but it is great. It's this, you're neither poor nor are you rich enough, and you're stuck in that middle, right? And that's that population that we do no innovation for. We don't look at it from a customer centricity and say, this customer has got a very fixed income, which is going to be lasting him or her for X number of years. Okay, so how can we innovate keeping the customer in mind? All the innovation is done keeping the insurance company in mind, keeping the providers, health providers in mind, but not looking at the customer and seeing how is it that we can provide a health cover for this customer for the rest of his or her life by innovation and by technology. And I think there's a lot of knowledge available across the world. If we pull it together and we pull resources together, telemedicine is really upcoming today. Telemedicine can't cost an arm and a leg. So is there a possibility when you look at a customer who can afford only this much to see whether he or she can actually get telemedicine from some of the best doctors across the world? Does it necessarily have to be managed care, which is managed by a health insurance company, which then has so many overriding costs there that it builds in that the end customer is not served at all? So can we use technology? Can we use innovation to address the crying need of that population of which I refer to as the middle class?
That's fantastic. You heard it here first. The world is one, and Vishaka's laid out amazing ways to protect people. So Robin, we're going to close out our session with your comments on innovation. You've seen the significant role the insurance industry played for its clients through the pandemic. How has that whole experience kind of modified your strategy and helped you re-engineer your offerings to meet client needs?
Yeah, and I love how Vishaka talked about it. It's about the client, right? That's what we're there for. We're about addressing, and it goes back to the first where we started. It's about addressing the gap in terms of protection and retirement and building that trust for clients. And so during the pandemic for Equitable, it was not shifting our strategy. Our first responsibility was to remain sounding and ensure we were there for our clients. We were in a global health pandemic. Insurers are the ones that are providing this protection and advice for clients to manage through this environment. So for us, it was about first is being there for our clients. What we did modify or change slightly is, and just double down on, I would say, is how we provide advice. So at Equitable, our company is built on three companies: an advice company, a retirement business, and an asset management business through AllianceBernstein. But everything starts with that advice. That's how we interact with individual customers and retirees. And what we moved into something that we call holistic life planning. That means looking at, and it goes back where Chris and Vishaka talked about, looking at the data. We have more data than anyone else, and being there and sitting down with our clients and helping them plan, putting our clients at the center. And we have strategies. I call it an all-weather portfolio. We have strategies that address different times of their lives, of different solutions that they need, whether they're a career builder, pre-retiree, or they're planning for the next generation. But putting them first, you can address what they need as a consumer and give them connectivity to the different needs and solutions that we have as an organization. So for us, it was about what we call holistic life planning, which is putting the customer in the center and being them through the different journeys that they have in life. And the pandemic caused many consumers to just sit down and take a look at the overall portfolio. Where are we situated? And you look at it now, you're not safe just sitting in a 60-40 portfolio in the US. The traditional 60-40 portfolio, I was looking, has a return of minus 16% year to date. So you lost money in bonds and you lost money in equities. That's where we play a role in insurance by providing protection and guarantees. So, but it comes down to sitting down with your clients, putting them at the center and building the trust and being with them and listening to them and addressing the journeys or gaps that they may have at different times in their life. It's not just a single point. It's about being with them across the whole journey and addressing their needs. So we call that holistic life planning, and that's where we focus quite a bit and where we continue to focus, as we think that's the future opportunity. And it goes back to building that trust, being with them at all times.
Well said. And what an excellent way to lay out, the strategy that you're using to protect your customers. So with that, we're going to wrap up our session. I want to thank everybody for joining us at the Global Insurance Forum. Today, we talked about protecting people and doing that by building organizations that are fueled by trust and purpose, and realizing that very often we're held back by artificial boundaries that keep us from coming up with more effective ways to help protect clients. So Vishaka, Robin, Chris, thank you very much for joining us today, and thank you for sharing all of your insights.
Thank you, Ken.
All right, thanks to Ken, Chris, Robin, and Vishaka for a terrific discussion. Let me quickly highlight a few items that I took away from today's session. First is that the protection gap is a complex issue, and it's one that we as an industry have been talking about for a really long time, perhaps leading, as Chris suggested, to a bit of fatigue with the topic. I think this complexity is almost certainly one of the reasons that it remains such a difficult issue to address. Vishaka pointed out that part of the complexity is self-inflicted because we don't even seem to have a common way of defining the protection gap, and we can't develop initiatives to solve the problem if we don't understand it. I share the panel's view that ultimately our shared goal should be about increasing the proportion of people who have adequate financial protection, and that economic proxies like premium compared to GDP might lead us astray from finding solutions to addressing that goal. A second takeaway for me from today's discussion was that many opportunities and needs have become much more front and center since the pandemic. The panelists highlighted the important role that the industry has to play in helping address many of these critical issues, including the impacts of aging and mental health, and the need to focus on a more holistic view of well-being. The panelists reiterated that the key to addressing these challenging issues is building lasting trust with consumers. That trust takes years to build, and it requires a top-down leadership within organizations to drive high-integrity, purpose-driven cultures. And finally, a unifying theme from today's presentation was summed up well by Vishaka. The world is one. We can see even more clearly today that the risks that we face and the opportunities that we're responding to are tightly integrated across the global insurance industry. And the past nearly 3 years have reinforced this as we've managed through this unprecedented global challenge together. Thanks again to Ken, Chris, Robin, and Vishaka for sharing your insights with us. And thanks to everyone for joining us for today's Global Insurance Forum session. Good day.